Hello and welcome. In this section, you will learn what CFDs are, you will understand the difference between CFDs and physical stock trading, you will see what different kind of fees there are, you will know the difference between long and short, you will discover which opportunities and risks are associated with CFD trading, and you will understand how you can calculate your profit and loss. CFD stands for Contract for Difference. Now, behind this unusual term, you will find a very simple principle. A CFD is a derivative which is always linked to the price of an individual stock, a commodity, or an index future, for example. So, as a consequence, the price of a CFD moves exactly the same as its underlying instrument. You as a trader can speculate on this price movement and enter a contract to pay or receive the difference in price between entering and closing a trade. Such deals normally take place between an individual trader and a broker or market maker offsite a regular exchange. So, why not trade shares directly with a stock exchange? Quite simple, because with CFDs you are able to trade a multiple of your own capital, and that's what we call leverage. Now let me give you an example. Let's say you want to invest in Daimler shares and buy those shares at the stock exchange. Let's further assume that Daimler is quoting at 45 euros. If you have 500 euros to invest, you can buy 11 shares. If instead you decide to enter a CFD trade in Daimler shares, you have much better means. That is because you only have to deposit a margin. That is the amount of money that your broker or market maker needs as a security deposit to cover a possible trading loss. If you trade with Warengold Bank FX, you only have to deposit a 5% margin, so you can leverage your own capital 20-fold. So let's calculate. With 500 euros of your own money and a requirement of 5% margin, you can theoretically invest up to 10,000 euros. With 10,000 euros, you have a purchasing power to buy 222 Daimler CFDs instead of only 11 shares at the stock exchange. When the share moves only 50 cents, you will see a sizable effect on your account. With 11 shares and a 50-cent appreciation per share, you will see a profit of 5.50 euros, fees excluded. However, a 50-cent rise per share with a position of 222 Daimler CFDs results in a profit of 111 euros. That's a pretty big difference. Sounds great, doesn't it? But we are not finished with the advantages of CFDs quite yet. At the stock exchange, you can usually only buy shares to profit from appreciating share prices. But what if you expect the share price to fall? Would it not be great to profit from that as well? Well, it can be done with CFDs. For example, you can sell a Daimler CFD to open a so-called short position. You see, whenever you buy shares to profit from rising share prices, we call that a long position. If you do the opposite and sell shares to speculate on falling prices, we call that a short position. Whenever you purchase or sell a share, there are fees that you have to include into your calculation. Basically, it's the same with CFDs. There are trading commissions which a trader has to pay with every buy or sell. If you hold a CFD long position overnight, you will have to pay a fee for financing. Now, on the other hand, if you hold a CFD short position, you can even earn interest on your position. If, however, you open and close a trade on the same day, there's no financing fee at all. So, CFDs are very interesting for day traders. Another question that you might ask is, what about dividends? Dividends are paid to traders who hold a long position in a particular share and must be paid by traders who hold the respective short position. With a CFD, however, you have no voting rights that you have whenever you buy a physical share. In the Warengold MetaTrader, you will find numerous CFDs from many international stock markets. Also, I recommend you have a look at some of the other videos about margin, financing, or long and short. In these videos, we are going to dig a lot deeper into these topics. In this section, you have learned what a CFD is, you have understood what the difference is between physical stock trading and CFD trading, you have learned about the types of fees in CFD trading, You have discovered what it means to go long and to go short. You have gotten an idea about the risks and opportunities in trading CFDs. And you have learned how to calculate your profit.